Hey everyone, and welcome back to the channel. If you've been following along, you've hopefully built that bulletproof emergency fund. Now it's time for the exciting part. Are you, like so many people in the UK, inadvertently leaving money on the table? Every single day you delay investing, you're not just standing still, you're actually losing ground. It's a tough truth, but a crucial one for your financial future. Today, we're diving into why delaying investment costs you a fortune, especially here in the UK, and how we can get you started on building real wealth. We'll expose a silent killer of savings, uncover a magical financial force, and even do a quick calculation to show you what you might be missing out on. Let's get investing. First, let's talk about the silent killer that's eroding your hard-earned cash: inflation. You might not see it happening directly, but it's constantly at work. In simple terms, inflation means that over time, your money buys less than it used to. Think about it. The price of your weekly supermarket shop, the cost of filling up your car, or even your favorite takeaway. They all seem to creep up year after year, don't they? That's inflation in action. The Bank of England aims for 2% inflation, but we've seen it much higher recently. This means that if your savings aren't growing by at least 2% each year, you're actually losing purchasing power. Keeping all your money in a standard savings account, especially with today's interest rates, often means your cash is losing value in real terms. It's like running on a treadmill. You're moving, but you're not getting anywhere. That's why simply saving isn't enough. We need to make our money work harder for us. Now let's talk about the antidote to inflation, and arguably the most powerful financial force in the universe: compounding. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. Compounding is essentially earning returns on your initial investment and on the accumulated returns from previous periods. So your money makes money, and then that money makes even more money. It's like a snowball rolling down a hill, picking up more snow and growing larger as it goes. The longer it rolls, the bigger it gets. Let's imagine you invest just PS 100 a month. Over 30 years, assuming a modest average annual return of 7%, which is fairly typical for diversified stock market investments over the long term, your total contributions would be PS 36,000. But thanks to compounding, your investment could be worth well over PS 120,000. That's PS 84,000 made just from your money working for you, not from additional effort on your part. That's the magic. To truly grasp the power of starting. Now let's do a quick mental exercise. Our cost of delay calculator. Imagine two friends, Sarah and Tom, both 25 years old. They both invest PS 200 a month with an average 7% annual return. Sarah starts now at 25 and invests for 10 years, then stops. She's contributed PS 24,000. Tom waits until he's 35, then invests PS 200 a month for 30 years, until he's 65. He's contributed PS 72,000. Who do you think has more at 65? Surprisingly, Sarah, who invested less and for fewer years, would likely have significantly more. Why? Because her money had a decade longer to compound. This simple example shows that the biggest advantage you have when it comes to investing isn't how much you put in, but when you start. Time in the market beats timing the market every single time. So, if it's so beneficial, why do so many of us procrastinate? Often it's fear. Fear of losing money, fear of not understanding it, or simply analysis paralysis from too much information. But getting started doesn't have to be complicated or scary. The good news is, you don't need to be a financial wizard or have thousands of pounds to begin. With accessible UK platforms, you can start with relatively small amounts, often from PS 25 a month. The goal isn't to pick the next big winner. It's to consistently put money into diversified investments over the long term. This significantly reduces risk and lets compounding do its magic. To recap, procrastinating on investing is a costly mistake. Your cash is silently eroded by inflation, while compounding offers incredible wealth-building potential that only truly unlocks with time. The earlier you start, even with small amounts, the greater your financial future. Now that you understand why it's so vital to start investing, you're probably wondering, okay, but how do I actually do it in the UK? In our very next episode, we're going to break down the first practical steps to open your investment account and make your very first investment here in the UK. Don't let another day go by where your money isn't working for you. Take that first step towards a wealthier future. If you found this episode empowering, please hit that like button, subscribe to the channel for more UK-specific investing insights, and ring the notification bell so you don't miss our next practical guide. And tell me in the comments below, what's your biggest fear about investing? I'd love to help address it. Thanks for watching, and I'll see you in the next one.